Happy Thirsty Thursday. Oh man, the market. You know, a lot of people was expecting the market to be rocket ships today. Some people were expecting the market to be just a sinking ship. I'm in my own world right now with just a very interesting mentality. So let's get started. If you're new here, welcome. I'm a raging SoFi tech bull. This video is going to be primarily not about SoFi. I got to be honest, and I am going to be talking about the Honest Company because I did sell one of my positions today, and I did buy another stock as well too. It should be no surprise. It's up on the screen. But yes, I'm a raging SoFi bull. I've attracted a lot of views and subscribers over the last couple months because of SoFi. But I also cover a wide range of different stocks on this YouTube channel. So if you're only here for SoFi, this video is going to be primarily NVDA related, AMD related, also Honest Company, and also SaaS related. So I respect you so much if you tune out of the video. Just do me a big favor and like this video and think about subscribing for more, because when I do make a SoFi video, well, then you'll be the first to get notified, right? Okay, so I got a lot of different things to really talk about here. Let's go ahead and talk about Honest Company before we really dive into NVIDIA and basically what happened with NVIDIA's earnings that were utterly amazing. Beat my expectations, beat Wall Street's expectations. Well, why is NVIDIA down by, oh man, the world's largest company just blew away the best revenue, EPS, the best expectation, and they're down 5%? Why? AMD, baby. AMD. Oh, man, it's going to be so cool. Oh, I can't wait. Okay, so Honest Company. If you are new here, like I said, welcome again. I'm doing a public channel profile challenge, basically taking a couple tens of thousands to six figures over the course of 17 months. That may change down to 16 months if the market continues to sell off. The account challenge officially started January 2nd of this year. Hold on, I just got to double check. The market was actually, no, yeah, that's right. The market was open Friday, January 2nd. Thursday, January 1st, the market was closed for New Year's. So yeah, I'm doing a public account challenge. Why am I doing it? To really motivate people. I've been in the market for a while. I've made life-changing money with just basic principles and strategies. I stick to my strategies, even if it means cutting a loss, because all the times in my life that I have not stuck to my strategy, I have lost friggin' money. And I'm pretty sure anyone out there that has been now or turned into a well-rounded trader investor can probably say the same thing. Whenever you go against your strategy, it tends to make you lose money, okay? I have an entry strategy and I also have an exit strategy. Yes, I'm a raging SoFi bull, but guess what? There's going to be a time where I'm going to sell SoFi, okay? There's going to be a time where I'm going to sell AMD. There's going to be a time where I'm going to sell Palantir, Hood, Meta, Adobe, PayPal, and well, today I sold Honest. So Honest came in with very bad earnings, okay? Obviously they missed on rev, they missed on EPS. Their guidance was also very questionable. Now, what is going on through Honest Company, and for anyone that doesn't know about Honest Company, hold on, morning water electrolytes. There we go. I'm actually on a coffee detox right now. I'm on day number 6. I was drinking way too much coffee. I'm starting to actually rejuvenate my natural energy. Oh, it was a kick in the face the last week. But actually, no, today's day number 7. Woo! Yeah, day 7. So Honest Company is going through a transformation period. Who else went through a transformation period? Oh, SoFi. Who was buying SoFi in February of 2024? This guy right here. However, here's the thing. I don't want to be an Honest Company for the long haul. I want to be in SoFi for the long haul because SoFi is a disruptor company. Is Honest Company a disruptor company? It's very questionable. In my honest opinion, you know, no pun intended because I keep saying the word honest here. I want to say no. They make very organic baby wipes. Obviously, people that are very much into organic, I'm a very organic human being. My diet is very much organic and 100% grass-fed beef. I'm very much in the low-carb carnivore community. And even some non-starchy veggies that I go ahead and have, such as organic cauliflower turned into cauliflower rice. You can even do organic broccoli, organic sweet peas, organic berries. You're gonna like Honest Company because they're a very clean, safe baby wipe. And apparently babies actually do get some rashes from some of the baby wipes out there. And that's their entire like business model. Now they're going through a transformation period where they're taking away the items that do not work on their balance sheet, and they're turning it, they're basically saying, okay, firstly and foremost, the market valuation of Honest is hold on one second, I gotta bring it up for the market cap. We gotta go ahead and minus 20% here because they just friggin' popped. 309 mil. Okay, before their earnings, I believe it was like 280, 275, call it even, right? They're sitting on a gigantic amount of cash. Close to $100 million of cash. And your company is it's at a market cap of 275, now over 300 mil. That is a lot. So they announced a share buyback of 25 million shares. That's give or take could be a little bit under 10% of the company. Obviously, the company right now is popping. But will the pop ultimately come back? That's definitely questionable. But if we go ahead and look at like their total revenue year over year, obviously not good. Organic revenue, okay, you know, but I mean still like 0.7%, like that's nothing. You look at NVDA, big difference, okay? Cash on hand, this is really big. Okay, very, very, very big. Because here's the thing. You could be losing money year over year. But if you have cash on hand to really say, okay, well, we lost 11% year over year. That comes out to about $11 million that we lost. We got $89 million, you know, to the company's name. Sure, yeah, okay. It kind of makes sense. So the company is not looking to go bankrupt anytime soon. They're going through a transformation period. Now, I ended up buying into this stock several months ago here on this YouTube channel. And I said my strategy is just really a risk-on play. And the reason why I said it's a risk-on play is because, one, the technical analysis was very much oversold and very much ran down. Right now I'm on the 5-minute time frame. Let me go ahead and pull up Honest here. So basically, pretty much, back in November of last year, they had a massive surge in revenue. Massive surge in revenue. Look at their EPS. Their EPS, I mean, obviously their EPS changed by literally, like, a very, you know, pennies, right? Like literally pennies. But because their EPS grew massively, it bumped up the stock so very high. And the thing about penny stocks, definition of a penny stock is any stock below $5. However, that is even really questionable because there are some stocks out there that are like below $5, but their market cap is like friggin' in the billions because they've either done a split, a stock split to the forward, or their stock has just fallen off, you know, an utter cliff. But I got into this stock with the strategy of like, hey, I just want to put my money somewhere for kind of like a risk-on play, even though, you can argue that my entire profile on this YouTube channel is risk on. I'll debate you any day out of the week because, sure, it is very risk on, but I'm invested in growth companies that are exploding. It's not like I'm investing in growth companies that are decelerating, okay? I'm not hoping that they're going to be growing. I know that they're going to be growing because I listened to the conference calls and their management team has proven themselves multiple times. Multiple times the management team has proven themselves. I'll pull up the channel profile here in a minute, but SoFi, AMD, Palantir, Hood, Meta, Adobe. PayPal is another interesting one I got to make a separate video on. But PayPal is also a very small position for me as well, like Honest. Honest was my smallest position. So anyways, literally, it is 11:11 a.m. right now. That's actually a really good angel number, by the way. Cheers, angels. I was actually in my kitchen with my laptop cooking my first meal. I do a lot of daily fasting, intermittent fasting, very, very healthy for you. For anyone out there that is suffering with some health issues, definitely look into it. I am a health coach, by the way. Oh yeah, I'm a jack of all trades here. I was cooking my first meal, and I had my laptop. I'm actually listening to some YouTube videos. I actually not even stock related, unstock related, and I get notifications, and I see Honest is up by 10%, and I'm like, okay, you know, they're popping good, and then the stock pretty much goes up another 10%, and I remember my strategy. My strategy is, and I said this multiple times, is that if Honest gives me a quick 10% return, even though 10% is nothing, it's utterly just like a little bit over $100 on here, I'm going to reallocate that money into other positions that are going to be exploding over the next several years. So basically take, hey, you know, now let me go ahead and back up a little bit also. Could Honest Company literally double up from here in the next year? Sure. But that's not my strategy. My strategy was not to be in Honest for a long-term play. I'm in SoFi for a long-term play, AMD, Palantir, Hood, Meta. My game plan has changed because the friggin' company is spending so much friggin' money. Okay? Adobe, game plan is still rock and rolling. So, as long as the company has not changed, you got to stick to your strategy. And hey, I looked at my profile and I said, hey, I'm up over 10%, sold. I immediately bought one share of AMD. Why did I do that? Because AMD is down once again, and I said this, I believe yesterday or the day before, if AMD gets below $200, I'm going to be buying another share or two. Well, it doesn't have to be friggin' perfect. NVIDIA crushed earnings like you cannot imagine, and they're bringing down semis. Let's go ahead and talk about, oh man, I got so many different things to talk about. This video may be over 20 minutes, I'm sorry. What's the next thing that I want to talk about relatively quickly? Let me hold off on NVIDIA. Let me talk about Salesforce. So, Adobe is reporting earnings next week, and Salesforce came in with very, like, I want to say, for a company, they're growing year over year. Salesforce, they ended up triple beating year over year. Okay, total revenue, phenomenal. 12% they're growing. Free cash flow, growing. There was nothing at all in their earnings call to indicate that AI is going to obliterate them. Nothing at all. Adobe even said this like the previous quarter, and they've actually been saying it for the last like year now. There is no signs that AI is going to be taking away Salesforce and the company. I don't own Salesforce, but I did add Salesforce to my watch list because JPM affects SoFi. NVIDIA affects AMD. Coinbase, I gotta kind of move away. Well, Coinbase, I honestly probably going to remove Coinbase. I actually was thinking about getting in Coinbase. I'm actually glad that I did not and bought more Hood shares. Bitcoin affects Coinbase and also Hood. Meta is in its own world. Adobe is affected by all of SaaS. Salesforce affects Adobe. Adobe affects Adobe. AI affects Adobe. So a lot of these stocks I have on here are pretty much mirrors of my positions in a way. But right now we're seeing that a SaaS company came in and triple beat, and they're down. Yeah, that's right. Salesforce actually, hold on one second. Okay, apparently I lied, or maybe the charts lied. Salesforce was down last night after earnings. Obviously, they are rebounding because this applies with friggin' common sense here. Okay, after earnings yesterday, Salesforce was down. After earnings yesterday, NVIDIA was up by like 1%. Kind of really funny how the semis are now down and the SaaS is really up, right? Adobe is going to be huge. I really feel that Adobe once again is going to come out and they are going to triple beat. Now, is there a possibility that Adobe goes down after hours? Oh yeah. And what is going to happen if Adobe goes down after hours? Well, now that I sold out of my honest position, I got some bling bling on here. I'm going to be buying more shares of Adobe. Why? Is because I use Adobe products every single day. Every single day I use Adobe products. It's kind of really funny because if you go back a couple months on this YouTube channel, my Adobe position was actually up by 15%. And that just makes me want to buy more shares. There was absolutely nothing in their previous earnings to indicate that the company is being taken over by AI. If anything, AI is actually going to be accelerating their growth. Why? It's because, believe it or not, a lot of Adobe products can be integrated with AI. People don't understand this, and it just makes me want to buy more. But, I have a strange feeling that Adobe can experience the same thing. Experience kind of a tidal wave of little pussies and tweakers and sell off after earnings. And then maybe we're going to be in the green the following days to come. And if Adobe sells off after their earnings, I'm going to be buying. And I'm going to buy a couple shares. And if Adobe goes up by 1 or 2% after their earnings, I'm probably going to buy maybe only one share. Maybe two if it's only 1 or 2%. But the realistical point is that Adobe, if you go ahead and run the numbers, which you should for every single company that you pull the trigger on, the fact that they are trading at these levels, and I got to eliminate honest from my watch list or my long positions here, they are trading at the levels back in all the way of 2019. That's an embarrassment. It's an embarrassment to Wall Street that Wall Street wants to put this stock down. You're talking, look at the revenue, look at the EPS, and you're talking a company that has, doubled their revenue and also EPS over the course of the last not even decade. And to send the stock all the way below the moving averages too. The stock is oversold the stock is oversold not only on a technical analysis, but also, in my opinion, on a fundamental analysis too. There is no reason why this stock should be so below the 50-day moving average, which is around $300. So if we do get a sell-off and then a move higher on earnings, we could recover to $300. And I mean, hey, my average on this profile here is, ironically, $304. So, I mean, right now for me to buy a share, it's discounted shares. Now, my plan for Adobe for the next year and maybe 2 years, as long as the company is continuing to do what they're doing, is to accumulate shares if they're in this stupid level. And once the AI fears go away from SaaS, we're going to definitely get back to where Adobe was at. Some people think it's unrealistical that Adobe could be at $600 again. No, okay? We're going through a recessionary fear period in software stocks. Microsoft is getting hit. I actually got to add Microsoft. Microsoft, where are you? Microsoft. I gotta add actually Microsoft to my watch list here, because Microsoft is the king of SaaS. What do you see? Microsoft is down from its all-time highs by how much? And by the way, there's absolutely nothing wrong with Microsoft. Tell me that Windows is going to be replaced anytime soon. Yeah, good luck making that statement come to tuition. 38% on Microsoft. 38%. Microsoft ended up triple beating. Why did it go down? Because of software fears. 38 friggin' percent. Microsoft uses AI. So the fact that we are seeing this entire obliteration of software stocks, it makes me feel really good being in Adobe. Really, really good. Now, here's the only problem. Adobe and Salesforce and Microsoft, which one is going to be the biggest return on your money? I really feel it's going to be Adobe. And the reason being is because I don't believe that Wall Street really understands Adobe, and they don't really understand how many people use Adobe products without even knowing they're using Adobe products. I talk about this every single friggin' video, but hold on. I'm running close to time here because I don't want to. I don't want to really tie up this video with just Adobe, but to make you understand about how many products Adobe has. And honestly, this really is not even like, this is just really not even like the full length. Okay. All these products, I've been on YouTube now for 17 years. You're telling me all these products are going to go bye-bye. All these products are going to be replaced by AI. And you're telling me that the company is just going to let it happen? Wall Street doesn't understand it, and maybe they're doing it on purpose. A lot of people are saying that this is artificial and Wall Street is doing this on purpose. If you believe that scenario, sure. Yeah, Wall Street may be doing this on purpose to pick up a lot of cheap shares. Okay, to really wrap up this video now, NVIDIA. NVIDIA came in with the best earnings that they could ever do. Look at this. Year over year, 72.8%. Data center, 75%. Net revenue, 82%. Wow. Why is the stock down, and why didn't the stock go up? It's because AMD is here. AMD is going to be eating away NVIDIA's market share, and people are not stupid. And if you really look at any other business model in the past, NVIDIA is a great company, but they are nothing special, okay? They are just a typical company like any other company. There was a time where a publicly traded company like, maybe let's go ahead and say Honest was the only, like imagine the first company ever. I don't know the name. I'm sure there's probably a lot, but imagine the first company out there ever to develop baby wipes. That company was the first to the party, and that company's revenue and margins were amazing. Well, guess what happened? Oh, wow, we got another company selling baby wipes. They're actually doing a really good job at marketing. Oh, wow. And then we have another company that's doing baby wipes. Oh, yeah, let's go ahead and check out them. You know, I really do love, this company because they're the first to the party, but this company over here is giving us a premium and is actually giving us some of of their stock. AMD for the next year and the next years to come is going to be the party. And once again, it does not mean that AMD is going to surpass NVIDIA. That's not what I'm saying. I get into arguments with NVIDIA bulls every single time I say this. It doesn't mean that NVIDIA is not a great company. What it means is that the party for another stock is about to start because the party has already happened for NVIDIA. It happens. The party for SoFi is going to happen. SoFi is going to go on a tear for the next couple years. And then guess what? If the evaluation doesn't make sense, I'm probably going to take some chips off the table. Because that's what smart investors do. Real smart investors. And then guess what you do with that money? Well, you got to pay Uncle Sam first and foremost. And then what you do with that money is you find another company. Because there's always another company out there. You find another company that, hey, the party is just about to start for them with their growth rates. So on a super closing note, hopefully you enjoyed today's episode. Drop me a like, please, as always. And hopefully everyone is doing great on their long-term positions. Once again, I'm not a financial advisor. This is what I'm doing, and this is my ideology. If you disagree, cool. You know, there's nothing wrong with that. First Amendment is very important. And I'll see you all with a brand new video tomorrow. Later.